Quick crypto briefing. 3 minutes and 20 seconds of the top stories you need to know. Bitcoin and markets. Bitcoin flirted with fresh all-time highs over the weekend, briefly trading above 22,000 before pulling back into the low 18,000s. Traders are positioning defensively ahead of a key U.S. inflation print this week, so expect higher volatility as options and futures desks hedge around that data. Open interest in Bitcoin and Ethereum options now sits in the tens of billions, signaling big bets and big potential moves either way. ETF flows and institutional demand. U.S. spot Bitcoin and Ethereum ETFs continue to attract heavy flows. Spot Bitcoin ETFs logged another strong inflow day, and spot Ether funds have seen record daily inflows recently. BlackRock and other large issuers are leading the charge. That steady stream of institutional money is one major reason BTC and ETH have been able to push toward new market highs while volatility stays elevated. Corporate and institutional moves. Public companies are still buying crypto in meaningful size. Japanese investment firm Metaplanet added 518 BTC, taking its disclosed holdings past 18,000 BTC as it pursues an aggressive accumulation plan funded with convertible bonds and preferred shares. Separately, on-chain analytics point to a very large institutional buyer accumulating hundreds of thousands of ETH over recent weeks, a pattern that suggests long-term treasury strategies now include both Bitcoin and Ethereum. Miners' M&A and strategy shifts. Mining companies are diversifying. Marathon and other miners are making strategic investments into AI and high-performance computing, with a notable deal underway to acquire Exion, an AI infrastructure provider. That reflects a broader trend. Firms that build scale for mining are redeploying capital and expertise into adjacent data center and AI businesses. Regional flows and market structure. South Korean retail and institutional flows have been particularly active, including heavy interest in miners and related stocks. Meanwhile, crypto asset managers reported around $500 million in net inflows last week after policy shifts expanded institutional retirement access to digital assets. That change appears to be unlocking new pools of capital. On-chain and derivatives risk. Watch the derivatives market. Recent perpetual futures liquidations wiped out sizable long positions in ETH and BTC, reminding traders that leverage amplifies moves. At the same time, on-chain whale flows and large USDT transfers are useful early indicators of profit-taking or accumulation. Right now, the signals are mixed, so patience and clear risk controls are important. Regulation and central bank research. Central banks are watching closely. A research paper from a major Asian central bank named both Bitcoin and XRP as possible alternatives to current payment systems, underscoring that monetary authorities are actively studying how digital assets could fit into the future of money. Bottom line, institutional adoption is real and powerful, but markets remain sensitive to macro headlines and leverage. If you trade, size positions carefully. If you invest, keep time horizons long. Like this update? Please like and follow for daily crypto news in 3 minutes or less.